It's Nick here from Nick's Taxes, back with another video. Today we're going to do a little stock overview of a Canadian stock that I think is very undervalued and represents a great investment opportunity right now, and that is Enbridge Inc. It trades on the Toronto Stock Exchange under code ENB.TO, currently trading around $38.90. This is a stock that is in the energy sector, and so it's obviously been hit hard. But before we get into the video, my name's Nick. I make videos on personal tax, finance, Canadian news, and Canadian recovery benefits and investing. So if that's of interest to you, please hit that subscribe button. And if at any time you get value out of this video, please hit that thumbs up button. It just lets me know that you appreciate this video, and it also gets this video out to other people who may be interested in this as well. So in previous videos, I did talk about Enbridge a little bit and how I think it represents some good value, and some of you have come back and told me that they want a video on Enbridge, so that's what I'm going to do today. So before we get started, we're just going to go into the profile so that you understand what this business is all about. They're based over in Calgary. It operates as an energy infrastructure company. The company operates through 5 segments: the liquids pipelines, gas transmission and midstream, gas distribution and storage, renewable power generation, and energy services. The liquids pipeline segment operates pipelines and related terminals to transport various grades of crude oil and other liquid hydrocarbons in Canada and the United States. The gas transmission and midstream segments invest in natural gas pipelines and gathering and processing facilities in Canada and the United States. The gas distribution and storage segment is involved in natural gas utility operations serving residential, commercial, and industrial consumers or customers in Ontario, as well as natural gas distribution and energy transportation activities in Quebec. The renewable power generation segment operates power generating assets such as wind, solar, geothermal, and waste heat recovery facilities. The transmission assets in North America and Europe. The energy services segment provides energy marketing services to refiners, producers, and other customers, and physical commodity marketing and logistical services in Canada and the United States. What does that all mean? It's a mouthful. Basically, they are pretty well diversified in the energy industry, but to keep things short, their main business is in pipelines. They own pipelines, and other businesses will pay to transmit different things through those pipelines, mainly obviously crude oil. They also are dabbled in the renewable power area. I know a stock like Enbridge in this kind of industry, being the energy and oil industry, there's a lot of controversy, a lot of talk and debate regarding, are these long-term players, or are we seeing kind of the demise and end of oil stocks? Regardless of what your stance is, Enbridge does have a poker in the fire in the renewable power sector. So I think that is a thumbs up for Enbridge, regardless of your outlook on the oil industry. I, for one, think the oil industry is going to bounce back. You need a lot of oil to grow the economy. A lot of buildings require oil as energy. So I think we're going to see a bounce back when the economy bounces back in 2 to 5 years. So let's take a look here. Enbridge, $38 right now. If you want to look at their max, we've seen a steady increase. They really peaked back in around the 2015 time. And then since then, it's been a little bit of a decline. But if you want to look back into the year, we saw it go as high as $56 pre-pandemic. Just like the rest of the oil stocks, we saw a crash back in March, and it hasn't really recovered. We've seen it bounce back up into the mid-40s, but now it's kind of hovering around the mid to high 30s. Not really too far off from where it was when we saw that initial nosedive back in March. Enbridge, what else do we need to talk about? Their market cap obviously is huge, $78 billion market cap. And the one thing that a lot of people are very interested in about Enbridge and in kind of oil stocks in general is the dividends. Dividend here obviously is $3.24 with a dividend yield of 8.53. And that is the number that makes this stock so appealing. Not just this massive drop from $55 down to the current 38, but it's also paying out a dividend of over 8%, which is just absolutely huge. So let's take a look here actually at their dividend. What you might not know about Enbridge is they've actually been increasing their dividends since 1995. Enbridge common shares have a compound annual growth rate of more than 11% over a 25-year period. Enbridge has a consistent track record of delivering annual dividend increases, and they have a goal to deliver shareholder returns through capital appreciation and obviously through dividends. And that obviously has been very true. If you want to look at their capital appreciation from 1995 to from 1995 to 2015, 2016, there's been definitely a steady appreciation of this stock. And on top of that, we're seeing increases in dividends. The next biggest question you want to ask yourself, though, when you see a dividend yield this high is it sustainable? And here, based on what we're seeing from Enbridge, it is sustainable as their dividend payout is approximately 65% of their distributable cash flow. So that is really good. Normally, if it's under 80%, you're kind of laughing. Enbridge is at 65%, which means they are able to afford this ever-growing dividend, and then they also have money left over to reinvest into the business or to pay off debt or whatever they want to do. That is definitely a good sign. And look at here at the bottom, Enbridge, their target dividend payout is below 65%. Right now, it's at 65%, and considering just how beaten up this stock is, a 65% dividend payout ratio is quite impressive. So I'm really satisfied with that. And with the fact that they own these pipelines, they are also reliant on the price of oil. So this stock also, not only are we going to see an increase, but we're going to see an increase when the price of oil goes back up. Obviously, the price of oil as well as these oil stocks have gone down, and when the economy recovers and when the oil prices recover, we should see Enbridge have a direct kind of correlation to those things with their price going up. Obviously, it's also reflected in their stock back in 2015. If you might remember, oil was kind of at its peak back then in terms of its price, and it has declined since then, and it's been kind of recovering ever since. If you don't agree, this is the beautiful thing though, with this 8% dividend yield and a 65% payout ratio, which is very safe. If you're not sure, if the stock's going to fully recover and even go back to, those $50 ranges or whatnot, you can afford to kind of wait, or even if you don't think it's going to go up, you're still collecting an 8% dividend yield year over year, and it's going to probably increase at that point. So if you're like me and you think that soon this stock's going to increase back from $38 to the $50 range, not only is your stock appreciating, but while I'm waiting for it to appreciate, I'm collecting dividends, and I'm collecting them at an 8% dividend yield, which is fantastic. So let's take a look to what the analysts have to say here over at Yahoo. The one thing I'm really interested in right here is their next year in 2021. The analysts think that the sales growth over the year is going to be an increase of 7.2%, which again goes in line with the fact that they think that the economy is going to kind of get back on their feet in 2021 and beyond. And as a correlation, the Enbridge stock should do well. Also, if we keep looking, there's a lot of analysts down here that are recommending this as a buy or hold. Some recommend it as a strong buy. The recommendation rating right now is a 1.9, which is more of a strong buy. To be honest, I wouldn't put too much stock into what the recommendation trends and the recommendation ratings are, because they're always changing, and a lot of times they kind of change to go with the times and the investor outlooks. Oftentimes these aren't always right. So if you're putting a lot of stock into this and buying stocks based on these recommendations and these recommendation ratings, you might set yourself up for straight up not having a good time, because these are always fluctuating and the markets are often wrong based on kind of what we think right now, not always what's going to happen in the future. The one thing I do like to look at though is their analyst targets, the price targets. So right now they have an average price target for next year at $50 with a high of 59 and a low of 36. So right now, with the price being $38, to kind of go along with what we were talking about earlier with the dividends, like even if it goes down to like $36, that's not a big drop, and you're still collecting these dividends, which would more than make up for that slight loss. But with an average price of $50, average price target, that's some pretty solid gains right there that we could see within the next year. So this is kind of a unique situation, I think, for Enbridge, where not only is it a great dividend play, but right now it's a great value play. Like, you can get some solid appreciation, some solid capital gains from Enbridge within the next year. And if you don't want to hold it because you don't think oil is going to be great, sell it, and take your 30% gain and go invest in some renewable energy or whatever you want to do. Otherwise, you're holding on to it. You're making 30% plus. Hopefully we see it increase year over year over year. And you're going to be locked in, if you buy now, at an 8.53% dividend yield. And again, like we've talked about, that dividend yield, or at least that dividend price, is going to increase over time. So that is my review of Enbridge. If you got value of this video, again, please hit that thumbs up button. I'd really appreciate it. And yeah, I will see you guys in the next video. I'm going to talk a little bit more about Enbridge in some upcoming videos, about what we can do with this regarding our tax situation and where we might want to invest in Enbridge coming in the near future. But yeah, stay tuned for those. And I will see you guys in the next video. Happy taxing.